Okay, hi, it's Eric Coffin from HRA Advisories. I'm here at the Metal Investors Forum, September 15th, 2017 in Vancouver. I'm here with Darin Labrenz, the president of Pure Gold Mining. Darin has a very nice project in Red Lake, and coincidentally, he just put out a PEA on the project yesterday, in fact, and I wanted to speak to that. I mean, obviously, you got an okay reaction in the market, but I know the feedback from a lot of people is, it would be nice if it was bigger. Obviously it would be, but I think you've got a couple of pretty trenchant examples, in the same region, similar type of project, similar size, and what happened with those companies in the last 6 months. I mean, there's been some M&A activity on things very much like the project that you're developing right now, that I think people are sort of forgetting that.
No, that's absolutely correct, Eric. I look at the landscape over the last year or two, and we've seen a real attraction towards assets that can deliver quality ounces at reasonable margins. And so one of the things that attracted us at Pure Gold on day one was jurisdiction and grade. And so we've seen that replay again and again over the last 2 years. Most recently, Richmont being acquired by Alamos. Island Mine has been a solid, steady producer, but its production profile is not that dissimilar to what we just released in our updated PEA. Integra, another great example, very similar story. Both Integra and ourselves bought assets at established mining jurisdictions, Val-d'Or in one case, or Red Lake in the other. These are past producers. They've got infrastructure in hand. We've got some existing permits. And we've walked into those with, eyes wide open as to what the opportunities could be, what could be done differently, and what hasn't been done before. And I think we saw the benefit of that in Integra's case, and I think we're seeing the benefit of that in our updated PEA that's just come out.
One of the things, people wonder, obviously, whenever they see a PEA, they kind of go, okay, well, that's it. I mean, that's what the number is. I mean, I'm sure for you, it's really just a snapshot in time. I mean, I know you've got plans in terms of increasing production, lengthening the mine life, preferably both, I suppose. I mean, what's the go-forward plan for you now that you've got these numbers out in the marketplace?
Yeah, we've always felt that the Madsen had outstanding growth potential. This is a snapshot in the sense that we've put out a PEA that shows a very long life mine, 14 years. We're producing on average 66,000 ounces a year. We're generating $400+ million in after-tax cash flow. Very modest initial capital of $51 million because there's existing infrastructure in place. We did have a high-level look at a larger scenario with the mill in particular. It has oversized tanks. It could handle 800 tons per day, likely push that towards 1,000 tons per day. So then you're looking at a replacement of the grinding circuit. And so we looked at a scenario where we moved it to 800 tons per day. It's about $23 million in additional capital to do so. And then you're starting to drive a production profile that consistently over a 3 to 4 year period generates 100,000 ounces per annum. So we know that potential's there, and that is a goal that we're driving towards. One of the things we're really excited about is that outside growth potential. We've been working in an area called Russet South, which is an analog to the high-grade 8 zone at depth. It sits about 1.5 kilometers to the west of the mill infrastructure, and it's at surface. And so we'll be putting out a first-time resource for that in Q4. We'll incorporate the Fork deposit as well. And we see these near-surface resources as having potential to give us a lot of flexibility in the mine plan and really drive forward to a larger throughput and ultimately a larger annual ounce production.
And just to clarify, because of the plant size that you're dealing with at Madsen, you bring, say, Russet South into the equation. It's very close to surface, but you'd be looking at either very small pits to access high grade or very short ramps. I mean, you're not trying to go after a bulk tonnage scenario there. You're trying to get other high grade material.
No, that's correct. I mean, we have the benefit of being right at surface, which gives us a lot of flexibility. One of the things we like about Russet South is that we're seeing gold mineralization on each and every of the geologic contacts there. So we've got gold on multiple contacts near surface. So it does lie quite well and is quite amenable to open pit mining, but the grades are still there. And so, results we put out in May of this year, we had 27 grams over 5.8 meters in Russet South, and it sits within the top 100 to 150 meters of surface. So we have the potential to supplement what we're seeing from underground at Madsen with high-grade feed from these satellite deposits, which again gives you that flexibility in terms of delivering tons to the mill and increasing the throughput.
Okay. It's a great story. Those are great numbers you put out yesterday, and Obviously, this is a story that still has legs. It can get bigger, both in terms of the resource and the production potential. And as Darin rightly pointed out, just in the last year or so, you can go back and see a couple of very similar situations that were taken out at fairly large multiples to what Pure Gold's trading at now. So it's definitely a story you need to take a look at. Thanks very much.
Thank you.
Thanks, Darin.
Appreciate it.